Hello everyone, welcome back to my channel. This time we have the discuss. We have we are going to talk about the topic for the review. Liquid market 2. Yes, just as usual, we'll skip the simple points. In this topic, we may discuss about the detailed calculation of the alternatives of the ratio, placement, convertible, something, etc. So the first one is the systematic risk, which cannot be which factors that generally impact on share price in market. Unsystematic that impact specific on the share price of a corporation. Unsystematic risk can be eliminated, while the other cannot. Yes, that's the first point. And next, we'd like to discuss about the active investment and the passive investment. Passive investment. So, for the active investment, we know that for the active investment, so based on this portfolio structure, based on a new information, is based on portfolio. So they all in from the portfolio structure, portfolio structure, and the first one based on the analysis. The next one is just replication of market index. Yes, that's true. That's difference. And the next part we will discuss about the buying, selling, direct investment. Direct investment, the indirect investment, which is different from direct financing and indirect financing. So it's just buyer and seller, buyer and sell shares, seller using the stockbroker. And the next one, invest purchase units in units on purchase units or unit trust or managed fund. Great, excellent. Next is about competition of taxation with classical tax system and imputation tax system. Company paid at the level, shareholder pays at personal margin rate, summary organization rate. So the difference is that classical tax rate is based on 45%. Yes, paid out with franking. So we need to know the franking credits. So in the imputation there is franking credits is the keyword. Franking credits, because any amount company paid that has already been paid. Yes, tax income is great. Capital gain, practically food. Next, after the tax, we'll discuss a price of share. We do not need to use the calculation for the constant dividend. The share of constant dividends is dividend divided by the rate, and the constant dividend growth is the dividends divided by the interest rate minus the growth. RE is interest rate. Share is considered to be the present value of the future capital gains. Yes. Present value of future payment, dividend payment that's company expected to pay to shareholders. Other factors influence. So that's in that part we need to discuss the current dividend and X dividend. So during period during 2 dates, the share value of the future dividend is stated in current dividends. At one date and pay the later, speculate the specific date. Next is the bonus share issue. Bonus share issues. So next is about, sorry for that. Next about share split. Share split just divided, right issue, pro rata. So I'd like to say this pro rata right issue would be examined in the quiz because it's a good question to examine. Yes, next part we'll discuss about the fundamental mental analysis. First is top down, next is bottom up. Top down to begin with is from the micro factor. Top down is arranged to macro factor, and bottom up is consider macro factors using rate and other issue accounting ratio. Yes, correct. Two method. Then is technical analysis. These two. And after that, there is a hypothesis for the random walk hypothesis. We do not need to discuss the random walk. We just need to use the EMH. Efficient market hypothesis. So we need to know the weak form. Weak form is reflect past information. So, and in semi-strong form is about the all public information, available information. The next part is the strong form. It's all information, including the inside inside trading information, inside information, including the inside information. Great. Yeah. And next, the final is behavioral financial hypothesis. It's based on psychology principle investment. Great.